And we're going to wind up our last Accounting 3 video lecture with Learning Objectives 3 and 4, where we prepare the financial statements for the company that we were working on in our first video this week. We're going to prepare the financial statements in a particular order, and hopefully at this point you now understand how the numbers flow through the various financial statements and why they need to be prepared in this order. But we'll do the income statement, statement of retained earnings, balance sheet, statement of cash flows. And our statement of cash flows will look the same as if we were doing a merchandising business. So we're going to take our net sales for our income statement from the columns in our worksheet. And then we'll take the finished goods account from our general ledger. And we have our finished goods inventory January 1, cost of our goods manufactured. And then this gives us our basically a subsidiary statement, or a supplemental statement, I guess I should call it, that calculates how we get to that cost of goods manufactured amount. And then we plug that into our income statement and get our cost of goods that were available, that we had available for sale during the period. And then we have our finished goods inventory at the end of the period. We subtract that from what we had available for sale, and that tells us what we actually sold. We then subtract our cost of goods sold from our net sales, and we get our gross profit. And then from there, we subtract our operating expenses, and we'll move down to the lower half of that, and we'll get our net income, which we will then carry to our statement of retained earnings. And so now we move to the statement of retained earnings, and you'll see, of course, that there's our net income from the income statement and our dividends, our retained earnings as of the end of the accounting period, which will then move to the balance sheet. And we see the asset side of our balance, or the top portion of our assets for our balance sheet. Then we will move to the bottom half. And this will take us through our liabilities. And then we will move to the last portion, which is our stockholders' equity, where you will, of course, see the retained earnings that showed up from the statement of retained earnings. And lastly, we are going to prepare our adjusting, closing, and reversing journal entries for our manufacturing company. So now we are at the adjustments column of the worksheet. And we're going to use, these are our same transactions from the book that we had worked with during the first video. So we've got our work in process inventory and factory overhead, and we're only going to post to the control account the main work in process account. We're not going to do the individual job costing, the subsidiary accounts. And then adjustments B, C, and D get posted to the general and subsidiary ledgers. And so you can see the journal entries here. And again, all straight off of the worksheet. And now we get to our closing entries where we have 6 steps. So we're going to take the debit balance from the factory overhead account to the income summary account so we can close that out, because we're going to have more overhead at the next accounting period. And we're going to take the credit balance from the factory overhead account and transfer it to the income summary account. Then we take our revenue accounts and we will close those into the income summary account. So we have 2 revenue accounts, one coming from our sales and the other coming from interest revenue. And we will then take the cost of goods sold and all our expense accounts and close those into the income summary account. And then we transfer the balance of the income summary into our retained earnings. So we will now eliminate our income summary account and increase our retained earnings. And then we transfer the balance of the cash dividends also into retained earnings, so that we will zero out our cash dividends and it will all get collapsed into retained earnings. Toy Joy reverses 2 of the adjusting entries made on December 31st, the interest payable and interest expense, and the factory overhead and the work in process inventory. And this was something we had done 1 or 2 chapters ago and talked about how we basically reverse those so that overhead can be applied as the products are completed. So essentially we reverse them and then we close them and reverse them back. And that concludes Accounting 3. Congratulations on completing the last video lecture of the semester, and on to the homework.